All right, let's talk about a topic that's kind of like the Mount Everest of the financial world: margin trading. It's a high stakes, high altitude climb that promises some absolutely incredible views from the top, but it's also packed with risks that you have to respect.
So let me just ask you this. Have you ever been watching the market and just wished you could get to your financial summit, a little bit faster? Well, some traders use what you might call special gear to do exactly that. So what is this special equipment? Well, let's gear up for our first section where we're going to break down what margin trading actually is.
At its heart, margin trading is pretty simple. It's a method that lets you borrow friends so you can open bigger positions than you could with just your own money. Now, the key here, the really important part, is that your own capital is the collateral. It's like your security deposit. Think of it like a pro climber borrowing some super advanced gear to scale a cliff they just couldn't manage on their own. So you've really got two ways you can go up this mountain. On the one hand, there's spot trading. That's like climbing using only your own strength. Your progress is tied one-to-one with your capital. It's a slower, much steadier ascent. But on the other hand, you've got the special gear, margin trading. Here, your climb is amplified by borrowed funds. Yeah, the ascent can be way faster, but as you can probably guess, the stakes are a whole lot higher. And that idea of a faster ascent brings us to the real engine inside this special gear. Let's call it the rocket-powered ascent. In the world of trading, it's known as leverage. So what is leverage really? Well, it's the tool that basically multiplies your exposure to the market. And what that means for you is that even tiny little price movements, up or down, suddenly have a much, much bigger impact on your investment. Let's just throw out a number to make this real. Say 5x leverage. It's a pretty common level. All it means is that your exposure to the market is now 5 times bigger than your own capital. So for every $1 you put in, you're actually controlling $5 worth of that asset. Now here's the magic. Here's the appeal. Let's say the market price goes up by 10%. Normally, you'd make a 10% profit. Not bad. But with 5x leverage, that 10% gain gets amplified into a massive 50% profit. That is the exhilarating speed we're talking about.
But, and you knew there was a but coming, right? This is a huge one. That rocket power works in both directions. If the price goes down by that same 10%, that 5x leverage amplifies your loss to 50%. Your capital can get wiped out just as fast as you can build it up.
You know, one of the sources we looked at put it perfectly. With leverage, gains are amplified, but losses grow just as fast, especially in volatile markets. And that word, volatile, is key. Think of volatility as the unpredictable weather on a high-altitude climb. It can turn a perfect situation into a dangerous one in an instant. So navigating that unpredictable weather means you have to understand the risks. And that brings us to the most critical part of our whole climb, the danger zone, and learning how to stay above the line. Every climber and every margin trader has a safety line. It's called the minimum margin. This is the absolute minimum amount of equity or value that you must maintain in your account to keep your position open. Just like a climber has a minimum safe altitude they can't drop below, if you cross this line, all the alarms are going to start ringing. So what happens if you do drop below that safe altitude? Well, you risk what we're going to call the Great Fall. This is what happens when the market truly, deeply turns against you. Let's walk through what that fall looks like, because it happens fast. First, market conditions get worse. Second, your equity, your collateral, drops below that critical minimum margin. That immediately triggers step 3. You get a margin call. This is a frantic warning from your broker telling you to add more funds to your account, like right now. And if you can't, that's step 4, liquidation. Your position is automatically, forcibly closed. It is the financial equivalent of your safety rope being cut. Okay, that sounds absolutely terrifying. So how do experienced traders deal with this? How do they not fall? Well, let's open up the Pro Climber's Handbook and talk about managing the risk. Professional climbers don't just wing it, and neither should you. They have a safety checklist, and it's non-negotiable. It means having a crystal clear trading strategy before you even think about starting. It means using tools like stop-loss orders to automatically close your position if it hits a certain price. It means constantly, and I mean constantly, monitoring your positions. But maybe the most important rule of all, you have to stay disciplined under pressure. That's often the hardest part. So who should actually be attempting this climb? The sources are really clear on this one. Margin trading is a strategy for experienced traders. It is for people who get the risks, who understand how volatility works, and who have the emotional discipline to handle the pressure when things start to go sideways. And all of this brings us to our final thought. You've seen the gear, that's the leverage. You've seen the mountain, that's the volatile market. And you've definitely seen the risks of the fall. So the real question is, are you equipped to handle the climb?